So Rhoda is basically asking, hey, we're going to invest in real estate. We're going to do that two different ways, by flipping properties and by buying and holding properties and acting as a landlord. How do we set these things up? Let me just kind of give you a general overview of what her question, because her question was like a paragraph long. She's basically saying that my husband and I just started a company to invest in real estate. We want to flip some properties and we want to hold some for rentals, maybe even Airbnb for short-term rentals. We both have full-time jobs. We just want to make sure we set up our LLCs correctly to maximize tax savings. Okay, honestly, I could probably talk about this for an hour, but I don't want to talk about it for an hour, and you're not going to want to listen for an hour. So here's the major point that I want to make. Let me kind of share it with you on the whiteboard here. Actually, before I do that, just so you know, Rhoda reached out to me by going to my website. It's navimuradcpa.com. She scheduled a 60-minute Q&A session because we needed that amount of time to talk through this sort of concept and this idea, okay? That's how you can get a hold of me. But you can write a comment in the section below or shoot me an email. And if I like your question, I may shoot a video like this about it, so feel free to do so. Anyway, so Rhoda is basically asking, hey, we're going to invest in real estate. We're going to do that two different ways, by flipping properties and by buying and holding properties and acting as a landlord. How do we set these things up? Well, first off, I want to let you know that I'm a CPA, right? And so therefore, I can give you tax advice. Can't give you legal advice. That's really something you should ask a business attorney about. So this answer comes from the lens of looking at it from a tax perspective. What I'm going to do here is I want to split your life, if I may, down the middle, okay? And I want to say over here on the right-hand side, this is where you might have a home that's in an LLC that you have for buy and hold, right? This is an asset that's gonna appreciate over time. And in the short run, you're gonna collect rental income and expenses. This is gonna go on a schedule on your tax return called a Schedule E, okay? And that's usually where it will go. If you do that with another person and you form an LLC, that might be taxed as a partnership, and it would not go on Schedule E, it would go somewhere else. It would actually be a partnership tax return. So I'll just put that on here, Form 1065. Okay. Now, for the properties, and by the way, the income tax paid here, or I should say the taxes paid here, is just income tax. That might be federal income tax. Man, my handwriting is terrible. Federal income tax or state income tax as well, if you're in a state that has state income tax. No Social Security or Medicare taxes here because this is considered a passive activity, okay? So I'm gonna put passive over here on this side. Now, if you're buying property with the intent to flip it, then that's not passive in the eyes of the IRS. That is what I would refer to as either active or earned income, okay? And that's going to be on this side. Now, you might do that in an LLC as well. That's fine. But the LLC, and I got to be careful what I say here, is created not really to save, well, let me not go down that path. Again, consult with an attorney when it relates to that. But the LLC here, if you wanted to have it, is fine. But your taxes that you pay on this, so let's say you bought a house for 100, put 50 into it, sold it for 200 grand, and let's just say you netted after everything was over, you netted 50,000 in profit. Okay, what's the taxes you pay on that? Well, like the passive asset, you have to pay your federal income tax and your state income tax, but there's one more tax you got to pay when something is active or earned income. And that is self-employment tax, SE tax, okay? That is synonymous with Social Security and Medicare taxes, all right? And that rate is 15.3%. Now, so there's some caveats to that. She may not have to pay that if she has a W-2 job, which in this instance, these folks that reached out to me had a W-2 job. If they have a super high paying W-2 job, they may not have to pay the Social Security tax. you probably want to consult with someone and don't just go off what I'm showing you in this video, but this is kind of how it generally works, okay? Now, if she's doing a lot of flips per year, let's say she does 4 flips per year. So now her profit is like 200 grand, okay? And let's say she didn't have a W-2 job. I would probably say, well, okay, form that LLC, right? But elect to have that LLC taxed as an S corporation. What that's going to do is that's not going to eliminate federal or state income tax, but it will reduce the SE tax that she has to pay. So instead of 15.3% on all of her 50K profit, she'll probably take this 200 grand, split it into a couple buckets. Maybe 50 grand is a salary, and maybe the other 150 is a distribution. I just made those numbers up, so don't think that that's what you're going to do. And on the 50,000 in salary, she'll pay the 15.3%, but on the distribution, gone. No 15.3% there. Okay, so that's kind of how it works. The important thing to note here is that passive assets, where you have buy and hold rental real estate. And by the way, Airbnb, I'm putting in this bucket too. I know you might not consider it as super passive. It's still passive in the eyes of the IRS, unless you're doing some really unique services there, like cleaning the Airbnb on a daily basis and offering, some sort of turn down service and, washing sheets every day and things like that. Then that could be different, but Airbnb is passive activity. If it's like, hey, yes, we do cleaning, but it's clean before you get in and clean when the guest leaves. Okay. I was saying that this is passive activity. It can go in an LLC. It's not going to save you any money in taxes if it's in the LLC. That's more of a legal protection type of thing. But that's how that works. Flipping properties, that's a little bit different. You may also want to have that in an LLC if you wish, but the taxes are different. It's not passive. So in addition to federal and state income tax, you're paying the self-employment tax. If you want to reduce the self-employment tax that you pay, if you're making more than, I would say, 50,000 or so in profit in flipping each year, consider the S Corp. It could save you money in the self-employment tax. So hope that was helpful. I know it was helpful to Rhoda when I speak to her about it. And hopefully it was helpful to you as well. Again, please get a consult with someone or book a Q&A session with me. It doesn't have to be me. It could be another accountant or another attorney. Just make sure that you're getting advice from someone and not just, running with this just because I shot a video about it. All right. With that said, I'll see you in the next Q&A session.